Welcome back, my audit enthusiasts, and I am happy to present to you another snapshot version. This time, we're going to talk about audit sampling. As per usual, if what you desire is a more detailed discussion of audit sampling, I invite you to visit the related videos here in my YouTube channel, Let's Talk Audit and Assurance. But if what you are after is a more digestible, condensed concept map of audit sampling, then this is the video for you. So let's start. Well, if you have been following my YouTube channel, then you know that I am an audit risk model kind of gal. So I would often love to start my discussions with this one, and audit sampling is no exception. When we pull out the audit risk model, we again recall that audit risk is equal to inherent risk times control risk times detection risk. Let's put the spotlight on detection risk. We know that detection risk is unique because this is the only risk amongst the elements of the audit risk model that is controllable by the auditor. And that is why we love detection risk because we can control it. This is also the reason why we refer to it as the acceptable level of detection risk. And previously as well, we have mentioned that the auditor controls detection risk by adjusting the nature, timing, and extent of the auditor's audit procedures, in the sense that the stricter the auditor becomes, such as when the auditor has set acceptable level of detection risk to a low level, then the nature of the procedures will be shifted from the less effective to the more effective. In terms of the timing, the auditor will endeavor to perform as close to the balance sheet date as possible, or covering the entire period under audit as compared with interim. And in terms of the extent, we did make mention that the auditor will utilize a larger sample size in case where the auditor wants to be stricter in the audit approach. And so here we are talking about the extent, and we have mentioned about sample sizes even as early as when we mentioned the audit risk model. But do you know that sampling is not the only way for the auditor to determine the extent of testing? In fact, according to our auditing standards, the auditor may choose between 100% testing specific items or audit sampling. Yes, you heard that one right. The auditor may perform 100% testing. That means testing the entire population. Of course, when the auditor decides to do this, the auditor does consider certain factors, such as, for example, the characteristics of the population, whether it is cost effective, and perhaps whether this is something that has something to do with significant risks. So, generally, for those characteristics, the auditor may consider 100% testing. However, I think at this point, we both know that 100% testing is sometimes not too cost effective, right? That will not only require the auditor to devote a lot of resources, but also a lot of time. And so, another option for the auditor is to perform specific items testing. Specific items, as you might have guessed it, is where the auditor has set a certain criteria for the items to be tested. For example, when the auditor says, I will test all items over a certain amount, where I will test items that will contribute to my understanding of internal controls. So, meaning to say, under specific items or specific selection, the auditor has a defined set of criterion or criteria for an item to be tested. Having said that, we then recognize that those items that do not meet the criteria, basically, they also do not get tested by the auditor, which will now lead us to the third and perhaps one of the most popular ways to determine extent of testing, and that is, of course, audit sampling. Now, we know that audit sampling is basically testing less than 100% of the population, but the unique thing about audit sampling is that all units of the population has a chance of being selected. Unlike specific items, where if the item does not meet the criteria, then it has zero chance of being selected. But under sampling, while similar in the sense that both of them do not test 100%, but in sampling, all units have a chance of being selected. And it is precisely audit sampling which shall be the main meat of our snapshot for today. Now we go back to detection risk, and we recall that basically detection risk simply means the risk of failure to detect material misstatement. We are basically saying that the auditor's procedures are not perfect. Okay, there will always be that risk that the procedure and the auditor will not be able to detect a material misstatement. Now, at this point, we appreciate the fact that detection risk is made up of both what we call non sampling risk And when we talk about non sampling risk, it's simply risk that is not related to sampling and sampling risk, or the risk relating to a non representative sample. Let's take a look at sampling risk first. So, when we say risk related to a non representative sample, this begs the question, what then is a representative sample? Well, we get to hear definitions about how representative sample embodies or characterizes the population. In short, a sample is considered representative when it looks the same way, it behaves the same way as the population. So, a representative sample, in simple terms, is a sample that looks like the population. So that is a representative sample. So whenever the auditor performs sampling, for as long as the auditor performs sampling, then there will always be sampling risk. Because to take a sample means to take a smaller portion of the population, right? And so when you take a smaller portion of the population, those items which are not included in your sample contains the possibility of sampling risk. Okay, so having said that, then for as long as you perform sampling, there will always be sampling risk. Now, do you know how the auditor can be assured, can be guaranteed of getting a representative sample? Well, the answer to that is unfortunately, there is no such way. The only way for you to know for sure that your sample is representative is to test the entire population. But then you're performing sampling in the first place because testing the entire population is not cost effective. And so, therefore, for as long as you perform sampling, there will always be the risk that your sample is non representative. Now, sampling risk can be managed by the auditor. How does the auditor manage sampling risk? Well, the auditor can perhaps the auditor can decide on increasing the sample size, because the larger the sample size is, the smaller will be your sampling risk. Remember what we said a while back, that all of those items that are not part of the sample represent sampling risk. So if you increase your sample size, there will be lesser and lesser items that are not part of your sample. And so therefore, sampling risk is reduced as well. Now, if you want to eliminate sampling risk, all you have to do is to not perform sampling. If you want to eliminate sampling risk altogether, then test the entire population. Because when you test the entire population, there is no sampling risk because there's no sample to begin with. So you may eliminate sampling risk by testing 100% of the population. Another way to manage sampling risk is by choosing the right sample selection techniques as well as the right analysis for your sample. Okay, so that is sampling risk. Now, let us assume that you would like to err on the side of certainty, and therefore you said, I will not perform sampling so that I can eliminate sampling risk. I will not perform sampling, I will test everything. My question to you now is, will that then guarantee that the risk of material misstatement will now be detected by your procedures? The answer is unfortunately no. Even if you test the entire population, there is still no guarantee that the procedures that you have performed will detect risks of material misstatement. There will always be that risk of failure to detect material misstatement. Why? Because there is the presence of non sampling risk. Non sampling risk is a risk not related to sampling, and this is generally born out of, for example, instances whereby there is no proper planning, or there was no proper supervision, there was no proper review, there was no proper quality control procedures made by the auditor. Therefore, when you talk about non-sampling risk, it's the possibility of looking at a representative sample. So if you think about it, you were able to chance upon a representative sample, but then the auditor themselves were not able to detect the misstatement because of the previously mentioned factors. So the non-sampling risk is a risk that is attached to the auditor, not anymore the sample. So when we talk about non-sampling risk, it cannot be eliminated because you cannot eliminate the auditor from the audit. How can there be an audit if there's no auditor in the first place? So you cannot eliminate non-sampling risk. However, you may still manage it. It may be managed by proper planning, proper supervision and review, and of course, proper quality control policies of the firm. So, non sampling risk cannot be eliminated but may be managed. Sampling risk may be managed. If you want to eliminate it, then do not perform sampling. Okay? So, let's put the spotlight back on sampling risk. There are actually two types of sampling risk. There is what we call the alpha risk and the beta risk. The alpha risk is sometimes called the type 1 risk, and I think you can guess the beta risk is a type 2 risk. Now, in most auditing theory textbooks and literature, you would normally see the illustration of the alpha and the beta risk by the following four quadrants. So, this is a very common illustration of alpha and beta. So, let us assume that those quadrants or those that are presented in the green font represents the true state of the population. Meaning to say, had you tested the entire population, this is what you would have seen. Okay, that perhaps in this instance, because you would notice the terms used are adequate and inadequate, so this will refer to test of controls. So let's illustrate this one via test of controls. So, meaning to say, you may have seen, had you tested the entire population, that the controls are adequate or they may be inadequate. But because we did not test the entire population, we only tested the sample, so we can only see the results coming from the sample. So, assume that those that will be represented later in red font are what you have seen in the sample, okay, whether adequate or inadequate. So, let's illustrate. Assuming that because you did not test the entire population, you only tested the sample, had you tested the entire population, you would have seen that the controls were reliable, they were adequate. However, because you tested only a portion of the sample, so we only get to see that result, and it so happened that the sample also showed that the controls are reliable. So in this case, it's a big yay! We were lucky enough to chance upon a representative sample. Take a look at that. The sample, the one in red, looks like the population, the one in green. So this is an example of a representative sample. It is also possible that had you tested the entire population, you would have seen that the controls are inadequate, they are unreliable. And you performed sampling, and the results of the sample showed that the controls are unreliable. So while we are sad because the controls are unreliable, but again, yay, that means our sample looks like the population. Therefore, this is another example of a representative sample. When the sample is representative of the population, then you would notice that there is no sampling risk, right? Because sampling risk is the risk of a non-representative sample. Let us, however, look at what will happen if, had you tested the entire population, you would have seen that the controls are adequate. Had you known the truth, had you tested the entire population, you would have known that the controls are reliable. But because you did not test the entire population, you only looked at a sample of the population, the sample unfortunately showed that the controls are not reliable. So we would notice in this instance that the sample and the population, they do not look alike, and this is an example of a non-representative sample. And remember, a non-representative sample would lead to sampling risk. Now, we also get to ask the question, between the sample and the population, where will you base your decision on? If you were asked right now, what will be your assessment of control risk? Will it be high, meaning you will not rely, or will it be low, meaning you will rely? Based on this quadrant, where the population shows that it is reliable, but the sample shows it is not reliable, what will be the basis for your decision? Now remember, you did not actually test the entire population. So at this point, you had no idea that the controls are reliable. Ergo, our decision will be based on the sample. And so at this point, the auditor will make a decision to not rely on the controls when in truth, the controls would have been reliable or the controls were truly reliable. But because you make your decision based on the sample, then you concluded that control risk is high, when in truth, it should have been low. And this, my friends, is what we call the type 1 or alpha risk for test of controls. We call this one the risk of under reliance. Why under reliance? Because you did not rely on the reliable. Why did you not rely on the reliable? Because you thought it was unreliable. So this is the risk of under reliance. You did not rely on the reliable, or this is sometimes called as well the risk of assessing control risk too high, because when you assess control risk as high, you did not rely on it. Okay, so this type of risk is said to affect efficiency. Sorry, this type of risk is said to affect efficiency. What do we mean by this? So let's put this one, or let's stretch the story to this one further. So we performed sampling, and the sample said we should not rely, when in truth we should have relied. Because we did not rely, we decided to perform extensive substantive testing. And since we performed extensive substantive testing, it took us a long time to finish the audit, thereby affecting efficiency. Had we known the truth that the controls were reliable, then we should have just tested the controls and then performed less extensive substantive testing and finished the audit early. But because of sampling risk, we had the risk of under reliance, and therefore, this has affected our audit efficiency. This is your type 1 risk. On the other hand, it is possible that had you tested the entire population, you would have seen that the controls are not adequate. You would have seen that the controls are not reliable. Internal controls are weak had you tested the entire population. But then you did not test the entire population. You only tested a portion of it. You only tested a sample. And unfortunately, the sample showed that the controls are reliable. Remember, we base our decision on the sample. Why? Because we did not see the population in the first place. We have no idea that the truth is it was unreliable. So, because we base our decision on the sample, then we decided to rely on the unreliable. Relying on the unreliable is a type 2 risk, and this is what we call the risk of over reliance. We relied on the weak controls. Now, what will happen if you rely on the weak controls? Chances are you will perform less extensive substantive testing, so you will finish early. It will not affect efficiency, but there is now a higher likelihood for your opinion to be wrong. And this high likelihood stems from the fact that you tested less, when in truth the controls were actually weak. So the risk of over-reliance is sometimes called the risk of assessing control risk too low. We're saying too low because when we assess control risk as low, then we rely on the controls. When in truth, it was really unreliable. Now, type 2 risk is said to affect effectiveness. How do you know that something is effective? If it meets the objective. And what is our objective? To give an opinion on the financial statements. Therefore, when our opinion on the FS is wrong, then our audit was not effective. So, between type 1 and type 2 risk, the auditor finds type 2 risks as more scary. Because if you think about it, type 1 risk is really just the risk of you not being able to finish the audit swiftly, right? You just take time to finish the audit, but in the end, your opinion will still likely be correct. Compared with type 2, wherein, yes, you may finish the audit quickly, but then there is a high likelihood that your opinion is wrong, thereby making your audit as ineffective. So we are more scared of type 2 risk. And whatever the auditor is scared about, the auditor will try to manage. That is why later we will get to see terminology such as the acceptable risk of over reliance. But more of that in the next slide. Okay, so this one represents alpha and beta risk for test of controls. Now, again, remember, type 2 is the scarier one. It affects effectiveness, and therefore we would like to manage that one. Now, the same story will be said for substantive testing. It's just that we make use of different terminologies. This time, we do not refer to adequacy or reliability, but rather we refer to the presence or absence of the misstatement. So, as per usual, the green one, the green font will represent whether there's a material misstatement or not. The red one will represent what your sample is telling you. So, again, if the true state of the population is not materially misstated and our sample is also not materially misstated, so yay, representative sample, our decision will be correct because our decision that's based on the sample is also the same one had we known the entire population. And again, it's possible that the true state of the population is materially misstated. The sample shows it's materially misstated. Again, a representative sample. So we have no problem. A problem will arise if the true state of the population is not materially misstated. Had you known the truth, had you tested the entire population, you would have seen that the population was okay. But because you only tested a portion in a sample, it is possible for the sample to show that it is materially misstated. Remember again, our decision will be based on the sample. So what we saw is that it is materially misstated, and because it is materially misstated, we have decided to reject. Okay, we have decided to reject the population. So therefore, the sample. So therefore, this is what we call as the risk of incorrect rejection. And again, this will affect efficiency because the auditor may decide to expand testing, okay, by virtue of the material misstatement that was found, okay, to test more or even to increase the sample size. So in this case, it will take the auditor quite a long time before the audit gets done. However, it's possible that the true state of the population is that it is materially misstated. But because you only tested the sample showed it was not materially misstated. Our decision will be based on the sample. So in this case, because it is not materially misstated, we have erroneously accepted it as correct when in fact it was not. So this is an example of a type 2 risk situation, and type 2 risk is the risk of incorrect acceptance. You have wrongfully accepted as correct that which is materially misstated. And similar to the type 2 risk in test of controls, this one also affects effectiveness and is it therefore more scary for the auditor. So this is our type 1 and type 2 risk, okay, illustrated according to these four quadrants. Now, do not memorize which quadrant refers to 1 and 2 because it is possible for the combinations to be changed, right? So, do not memorize the placement of the quadrants, rather analyze, okay, what the decision of the auditor is based on the sample versus what should have been the correct one based on the population. So, there you have it, type 1 and type 2 risk. These are our sampling risks. So right now, let's try to illustrate and summarize based on this concept diagram or map that we have, what are the steps in the performance of audit sampling. We basically have three major steps, and let's summarize it by the mnemonic PSE. If you're in the Philippines, so you might remember this one is the Philippine Stock Exchange, okay, but the mnemonics are PSE. Number one is to plan. Of course, we always start with a plan. Number two is to select, and number three is to evaluate. Now, there are about a total of 14 sub-steps, but I am not a big fan of memorizing the steps. So therefore, let's just draw out the most important events or ganaps or happenings in these steps. Let's start with planning. So when the auditor plans, okay, in the conduct of audit sampling, when the auditor performs planning, the auditor will have to first decide between statistical or non-statistical and whether the auditor will be using variables or attribute sampling. So we then recall statistical versus non-statistical. Well, what is the similarity? Both are acceptable. Yes, the standards do not favor one over the other. Both are acceptable. And we are also reminded that both make use of auditor judgment. Even if you use statistical, yes, you could never take out entirely the judgment of the auditor, whether statistical or non statistical. Only thing is that non statistical uses more auditor judgment. That's why in some texts they are called, this is called judgment sampling. Okay, but even statistical makes use of auditor judgment. So then, what is the main difference between the two? Well, the only competitive edge or advantage of statistical sampling is that it allows you to quantify the risk. So later, when you look at, for example, the acceptable risk of over-reliance, if it's statistical, it will be mentioned or assessed in terms of percentages. So you might say 5% acceptable risk of over-reliance, okay, or 10% tolerable error, 10% acceptable risk of over-reliance. So that's statistical. It allows you to quantify the risks. For non-statistical, by its name, non-statistical, the auditor will not quantify the risk but would rather use qualitative descriptions. For example, the assessed risk of or the acceptable risk of over-reliance is low. The acceptable risk of incorrect acceptance is high. Okay, so the only difference and the only competitive edge of statistical over non-statistical is that it allows you to measure the risk. But again, both are acceptable. Then, should the auditor decide to use statistical, the auditor will then choose between variables or attribute sampling plans. So, when you talk about variable sampling plans, these are more related towards the performance of substantive testing because you're talking about variables, variability, values, amounts. But if you're talking about test of controls, then an attribute sampling plan is more appropriate, as test of controls would look at attributes or characteristics, the presence or absence of controls. So in the planning phase, the auditor will decide, will I go for stat or non-stat, variables or attributes? Then the auditor will determine the population and the sampling unit. So we know the population to be the entire set of data with which the auditor wishes to draw a conclusion upon, right? We are reminded that whenever the auditor decides on what population to use, the population should be both appropriate and reasonably complete. What do we mean by the population should be appropriate? How do we know that the population is appropriate? Another way of looking at that is that the population must be relevant. How do we know it's relevant? If it helps you meet your objective. So therefore, when you are planning to perform a test for existence, do you remember this one? Existence would be a test for overstatement, and so therefore the auditor will perform vouching. So your population should be coming from the records. Your population should be the records, the listing, the journal entries. That should be your population. But if you are testing for completeness, then your population should be the source documents. So you cannot go and say, I will perform vouching and my population will be the source documents. That will not be appropriate. That will not be relevant, right? So it must be appropriate and it must be relatively complete. Remember what we said? One characteristic of audit sampling is that each unit of the population has a chance of being selected. So imagine if you are presented with an incomplete population, then those which were not part of the population will have no chance of being selected. So it must be complete. There are a few ways by which the auditor may determine relative completeness of the population, such as, for example, if the documents are pre-numbered, so you could use the pre-numbering to determine completeness, or entries and documents based on the time frame. So what is the first day of the year to what is the last day of the year, for example. So these are some ways by which you can assess completeness of the population. Now secondly, we talk about the sampling unit. So a sampling unit is the individual unit that will be selected by the auditor for testing. The sampling unit may be documents such as, for example, source documents, invoices, receiving reports, etc., etc. They may be entries, so those coming from your journal entries or from the listing, or they may even be peso amounts. So when the sampling unit is a peso amount, this is reminiscent, or this reflects what we know of to be probability proportional to size. If you have ever encountered the term PPS, or probability proportional to size, in the Philippine standards, we call that one the value weighted selection. Probability proportional to size uses the peso amount as its sampling unit. That's why we say the bigger the value, the higher the amount, the bigger is the chance of the item to be part of the sample of the auditor. You would notice that the use of the peso amount, and in this case probability proportional to size, will result to an automatically stratified sample. Why do we say this one? Mainly because the bigger amounts will already have a big chance of being selected, right? So this would also result to a sample that has a big percentage or proportion to the population, because you're already able to get the big amounts. Okay? The weakness of probability proportional to size, because it uses the peso amount, the moment the balance is zero, there will also be a zero chance of being selected. The moment the balance is negative, then there will also be a negative chance of being selected. That is why PPS is commonly used if the auditor suspects overstatements, because it leads you to the bigger amounts. Okay, but nonetheless, the sampling unit may be documents, they may be entries, or they may be peso amounts. And then thirdly, still under the planning phase, the auditor will determine the initial sample size. And the determination of the initial sample size will also differ it will also differ depending on whether you have chosen statistical or non-statistical. That's why it's very important at the start for the auditor to decide between stat or non-stat. Now, if the auditor uses statistical sampling, then in the determination of the initial sample size, the auditor will make use of sample size formulae or sample size calculators or sample size tables to come up with a sample size. But if the auditor uses non-statistical, then the determination of the sample size size will be based purely on the auditor's judgment. Okay, so again, determine the initial sample size will be affected by whether you use stat or non-stat. Now, at this point, it is also important to recognize the many factors that will affect sample size. Okay, now there are a lot of factors that will affect sample size, but these are the most important. Let's take a look at how these affect or what is the relationship to sample size. For example, if you talk about tolerable error, it's the rate of error, the rate of deviation, or the amount of misstatement that you are willing to accept, okay, in a particular sample. So tolerable error would have an inverse relationship to sample size. So just imagine if you're willing to tolerate a high level of misstatement, then you're basically taking on a chill state, right? A relaxed mode, because you're willing to tolerate a high level of misstatement. And so, because of that, if your tolerable misstatement or tolerable error is high, then you can just have a small sample size because you're in a chill state. But if the auditor is willing to tolerate only a very little rate of deviation or misstatement, then the auditor actually becomes strict. And so, because of that, the auditor will use a larger sample size. It's kind of like saying, give me a misstatement of 1 peso and I'll already be in panic mode. So, versus, give me a misstatement of 1 million and only then will I be in panic mode, right? So, the lower the tolerable error, then the bigger will be the sample size because the stricter the auditor is. Another one that will affect sample size is expected error. Now, when you talk about expected error, this is, by the way, when we say error, this would refer to both deviations and misstatements. Deviations would refer to the absence of controls. Misstatements, of course, will refer to differences between what was recorded and required versus what the client provided. So anyway, going back to expected error. Expected error is the deviation or misstatement that the auditor expects to find even before the performance of the procedure. Okay, so that's why it's called expected error. Now, generally, the auditor will come up with his expectation about the error prior to testing, coming from, say, for example, previous experience. So the auditor will say, last year, this account had a lot of misstatements, so this year I'll expect the error to be high as well. Or, other than previous experience, the auditor may also find this one from initial testing, or sometimes we call this one pilot testing, when you test a small, okay, an even smaller portion of the population prior to the actual sampling. Okay. Now, expected error will have a direct relationship to sample size. I think this makes sense, right? If you expect there to be a lot of errors, then you will be very strict. And so, because of that, you will have a larger sample size. Now, remember a while back, we pointed out that we are actually quite scared of the type 2 risk. Type 2 risk in the test of controls is risk of over reliance. Type 2 risk in substantive testing is risk of incorrect acceptance. And whatever we are scared about, we always try to manage, we always try to control. And the auditor does that by indicating that it is the acceptable risk of over reliance, acceptable risk of incorrect acceptance. The auditor will endeavor to control type 2 risk only. Okay, so there is no acceptable risk of under reliance or acceptable risk of incorrect rejection. So what will affect your sample size will be ARO and ARIA. And because it is stated in the acceptable, then the relationship will be inverse. This is what you will notice when it comes to relationships and sample sizes. Whenever we talk about tolerable, desirable, acceptable, the relationship is inverse. Even acceptable level of detection risk, right? The relationship is inverse. So in this case, acceptable, tolerable, desirable will have an inverse relationship to sample size. Now, in the case of population units, generally there is a negligible effect on the sample size. If you are quite familiar with sample size tables, you would notice that up to a certain level of units, then the sample will be the same. The sample size will be the same. So population units are negligible. Unless if you talk about substantive testing, for substantive testing, population units is negligible, but if you talk about the amount, okay, then the amount will have a direct relationship. Other items that we would be looking at that will affect our sample size is the assessment of the risk of material misstatement. So remember, the risk of material misstatement is uncontrollable by the auditor. So therefore, if the risk of material misstatement is high, then the auditor becomes strict and so will have a larger sample size. So the relationship is direct. If you talked about confidence level, okay, the degree of reliability that the auditor wants, the more you want to rely, the more you must test. So therefore, the relationship is direct. If you talk about variability, so in this case, variability refers to, how do I say this one? How variable, how near or how far the data points are from the mean. That's why we normally measure variability by standard deviation. So imagine if there are transactions which have a very large amount and transactions with very small amounts. So if that is the characteristic of the population, then that might mean that the population exhibits a high variability. So if there is a high variability, then the relationship to this with the sample size is also direct. The more variable the population is, then the bigger should be your sample size. However, there is something that the auditor can do in order to reduce variability. So the auditor, in an effort to reduce variability, will perform what we call as stratification. So to stratify means to group together items with a homogeneous or similar characteristic. In the case of substantive testing, this similar characteristic would often be in the form of balances. So say for example, you will say, okay, all client customers with a balance of less than 10,000 will be one stratum, one group. 10,000 to less than 100,000 will be another group, and 100,000 and more will be another group or another stratum. So by stratifying the population, the auditor has effectively reduced variability. And so therefore we say stratification has an effect of reducing your sample size because it was able to reduce variability. Okay, now we are reminded in the case of stratification, you can only draw a conclusion on the stratum that was being sampled. So for example, you have three strata, stratum 1, 2, and 3. If you only took your sample in stratum 2, then you can only conclude about stratum 2. You cannot conclude about the entire population that comprises 1, 2, and 3. Okay, so that's just the reminder for us in terms of stratification. And as what we have mentioned a while back, in terms of population and its peso value or peso amount, then the effect will be direct. Okay, but if you talk about population in units, then it's negligible. Now, what if the problem or the statement did not mention whether it's in amount or unit? So the general rule is that population has a negligible effect. So these are the considerations that we make when the auditor plans in the performance of audit sampling. Let's now go to the second step, and that is selecting the sample size. So when selecting the sample size, the auditor will choose between probabilistic and non-probabilistic sample selection techniques. Now, one thing to remember is that when you talk about probabilistic sample selection techniques, these are those which refer to, for example, the very popular random selection, okay, wherein each item in the population has an equal and known chance of being selected. This will also refer to systematic selection. Systematic selection is that which has an interval. So where you will have the population divided by the sample size, that becomes your sampling interval. So you generally start with a random start and then every nth item. So for example, if your interval is 5, so every fifth item becomes part of your sample. So that's systematic selection. There is, of course, value weighted selection, which we know to be probability proportional to size. It uses the peso value as the sampling unit. Now, there is also a special type of sampling that uses the attribute theory, normally done in the performance of tests of controls, and we call it discovery sampling. Discovery sampling is the determination of a sample size sufficient to include even just one misstatement or even just one deviation. The moment the auditor finds even just one deviation, then the entire population will be rejected. Okay, so have you noticed how strict discovery sampling is? Now, ordinarily, discovery sampling is used when the auditor has suspicions of fraud. Okay, so those are examples of probabilistic sample selection techniques. Included here as well is stratification. I just forgot to write it down. So stratification is part of that. Now, examples of non-probabilistic sample selection techniques are haphazard selection. Haphazard selection means that there will be no biases, ideally. No? So the auditor does not endeavor to include or exclude certain items. Imagine pulling out a cabinet and just taking out documents from that cabinet. That is haphazard. That's not random. So random is normally when there are numbers assigned to the units, and then you draw out random numbers and locate the document that is the same as the random number. That's random selection. But when you pull out the cabinet and just randomly draw out documents there, that is not random selection, that's haphazard selection. It's just like how when you administer surveys and what you did is just stand by the gate and then just randomly hand it out to people. That's not necessarily random, that's haphazard selection. Okay. And then there is also what we call block sampling. Now, a while back, we mentioned about stratification, and we said each strata exhibits a common homogeneous characteristic. In block sampling, this is a grouping of heterogeneous characteristics. Now, generally, we frown upon the use of block sampling unless the auditor uses a reasonable number of blocks. Okay, only then will it be acceptable. And then there is also what we call sequential or stop or go sampling. Again, normally used in tests of controls together with discovery sampling, another special type of sample selection technique. This is one which does not have a fixed sample size. So say for example, you look at the first level or the first tranche, and from the results there, you will decide whether to stop or to go. So that is stop or go or sequential sampling. Please be reminded that in the case of, I'm so sorry, I do have a reminder here, but it's kind of missing. I'm sorry. So allow me to just say it. So when we talk about probabilistic sampling techniques and non-probabilistic sampling techniques, then we got to remind ourselves that if the auditor has chosen statistical sampling, okay, I'd want you to take note of this one. If the auditor uses statistical sampling, then the auditor can only use probabilistic sample selection techniques. So I repeat, if the auditor uses statistical, the auditor can only use probabilistic sampling techniques. But if the auditor uses non-statistical, the auditor has the option to either use probabilistic or non-probabilistic in the selection of the sample. Take note, the auditor is free to choose between prob and non-prob in the selection of the sample if the auditor has chosen non-statistical. But once you talk about the analysis, once you talk about the evaluation, statistical sampling plans should use statistical analysis. Non-statistical sampling plans should use non-inferential, okay, or non-probabilistic analysis as well. So it is only in the sample selection that non-statistical has the freedom, the flexibility to choose between prob and non-prob. But if you're using statistical, has to be prob all the way. Okay, so that's the reminder that I wanted to give you. And then finally, we talk about evaluating the results. So in the case of evaluating the results, it will again differ whether you are using statistical or non-statistical. So in the case of statistical sampling, the allowance for sampling risk for test of controls, so ASR is allowance for sampling risk. The allowance for sampling risk is simply computed as the upper precision limit versus the sample exception rate. Now, I hope at this point we're able to imagine the sample exception rate. That's simply the number of deviations divided by the sample size. So if, for example, you have 100 as the sample size and 2 deviations, so 2 over 100, that will be 2% sample exception rate. Okay, the upper precision limit that we are mentioning here, because we're using statistical sampling, will be drawn out from either a computer software, okay, a statistical software, or a statistical table. Okay, so it's something that we draw out, that we locate, that we find in the software or in the table. And this would normally use information relating to what is your acceptable risk of over reliance. So if the auditor uses statistical, to compute for allowance for sampling risk, simply have UPL versus SER. But if the auditor uses non-statistical, because in non-statistical, arrow is not quantified, right? So the auditor cannot use the statistical tables okay, or the statistical software. So therefore, for non-statistical, the auditor will compute allowance for sampling risk simply as tolerable exception rate versus the sample exception rate. And the tolerable exception rate is something that the auditor sets, right? This is a judgment of the auditor. Okay, we are reminded that the higher the allowance for sampling risk, the more comfortable the auditor is that the control risk is less than high. Because we talk about the allowance for sampling risk kind of like as a cushion, okay, of the auditor. Imagine this one. If my tolerable exception rate is 10% and my sample exception rate is 1%, that means I have a 9% allowance. Compared with if my allowance for sampling risk is 10% and my sample exception rate is 8%, that means the sample exception rate is drawing very close to the tolerable. We will not feel very comfortable about this one. The allowance for sampling risk is only 2%. Okay, so the higher the allowance for sampling risk is, the more comfortable the auditor is that the control risk is less than high. Now, the closer your sample exception rate is to the tolerable, when the sample exception rate is about to breach or has actually breached your tolerable exception rate, then the auditor has some decision making to do. Okay, so for example, the auditor may what do you call this one? Reconsider the factors that the auditor used in determining his sample decisions. The auditor may decide to test more, okay, expand the sample size, or perform additional tests, or the auditor may decide to assess control risk as high, meaning to say the controls are not reliable. Okay. Now, for the final assessment, the auditor will compare upper precision limit versus the tolerable exception rate. The idea here is that nothing should breach the tolerable. The tolerable is kind of like our gate. Okay, so nothing should go out of the gate. Nothing should go beyond what we are willing to tolerate. But for non-statistical, the final assessment will simply be your tolerable exception rate versus your sample exception rate. Notice for test of controls, there is no explicit projection of errors, because in truth, when you perform test of controls, it's very difficult for you to make an estimate of the total population of controls. That's why usually for test of controls, there is no explicit projection of controls. I mean projection of deviations. Okay. For substantive testing, particularly for substantive test of balances, because tests of transactions will take the same analysis as tests of controls, the assessment or the evaluation of the results for substantive tests of balances will mainly be a comparison of tolerable misstatement versus the total likely misstatement. And the total likely misstatement is the projected error plus the anomalous error. Now, we recall that anomalous error or an anomaly is a type of a misstatement that is not expected to recur. Okay, it's an isolated event. So, because it's an isolated event, it's an outlier, we do not project it to the entire population. So, we simply use projected error plus anomalous error to represent total likely misstatement. The goal or what you would like to see is that hopefully the total likely misstatement will not go over the tolerable misstatement. The moment that it does, say for example, your tolerable misstatement is 1 million, but the anomalous error is already 1.5 million. I mean, sorry, the total likely misstatement is already 1.5 million. So it has breached the tolerable misstatement. So then the auditor will again have decisions to make. For example, the auditor may first decide to wait for the other areas of the audit to be completed, okay, because perhaps uh, there would be um, there would be findings from the other areas, okay, that will affect as well the misstatement that was found by the auditor. So that could be one. Another is the auditor may also decide to do additional tests of the same assertions, or the auditor may decide to increase sample size. The auditor may also ask management to adjust, okay, the known error or the sample misstatement, or the auditor may decide to ask management to adjust the account balance. And if management refuses to do that, then the auditor may decide to conclude that the account is materially misstated. Okay, so this, ladies and gentlemen, summarizes audit sampling. Now, I know I promised a snapshot and I know it's quite lengthy, but this is the best I can do to hopefully draw out the more salient and important concepts for audit sampling. In case you want a more detailed discussion, then please, by all means, watch my detailed lecture on audit sampling still here in my YouTube channel. Let's talk audit and assurance. But for now, allow me to tell you good job, everyone, for holding on until the last slide and until the last concept. Wow, that was, I don't know, like, yeah. Anyway, I hope you guys are learning something. So head on over to the next snapshot if it's already available, or you may want to answer some MCQs in order to reinforce the concepts that we have just reviewed. So thank you so much and see you in the next snapshot.